So now you are back and you've seen that we have drawn the high point and the low point. We're not going into technicalities just yet. We're building on our submission so that we understand what we've been taught and why we don't do certain things. So everything that we have drawn can be right, but there is an issue with what I have drawn. And what is that issue? Who can tell me? What is the issue with what I've drawn so far? It's not wrong. According to the definition, we have other traders here who have even been trading longer than me, and they know that what I'm saying is a textbook definition, but there is an issue with what has been drawn. And we need to pay attention to that particular issue and then go back into the notes that we've drawn prior or written prior and make corrections so we don't fall for certain mistakes. What do you think the issue is with what I've drawn? What do you think the issue is? We've identified high points, we've identified low points, but there is something that should be poking you in the eye, because the human mind will not allow this to just be this. What is wrong? The lows, thank you, Kenneth, the lows are not equal. Okay? The lows are not equal. Focusing on a particular point. What else? Drop them to me. They are not the same. They're not at the same price. I'm glad that everybody has, or those who have replied, has identified the same issue. So what happens when price gets to a high point and you see that the body is now above the line? We now have an issue. Do we sell or do we buy? Because what we covered briefly yesterday is that if price is able to go beyond that interval, what do? And you know the saying, you go times 2. So now in this case, you will see that the body is beneath the line, but the second time the body is above the line. So that would mean that if it breaks above the line, people will be confused and that they will buy. But what happened? The market started going down and it sold. Okay, same thing happened here. Body is beneath the line. All right, wick is beneath the line. Body is above the line. Body and wick is below the line. So though we are getting to a good place with understanding how Forex works, we're now encountering an issue where you might buy in a place where you would be selling, and you may sell in a place of buying. And the reason why I want to go through this in depth is because this particular topic is the #1 blower of accounts in Forex. Those who trade will tell you that this particular thing that we are covering blows accounts like no other. Because when you see price being able to pierce above a line that you've drawn and it has closed, that means that after its allotted time frame, it's been able to close above that line. It should be a signal to continue buying. But then what happens in the next few candles? It starts dropping. So we need to be able to add more information to this. That is why we're going back up to amend our notes. If you're with me, drop a Y or a yes, and we'll come back to this case study in just a bit. So let's go through the technical names so we understand where we are at. In the last video, I covered that this is known as a low point. When price gets to a low area 2 or more times, it means that we can draw a horizontal line. And if it gets to a high point 2 or more times, we draw that horizontal line. We're marking our lows and highs. The technical terms for this is that the low is called support and the high is called resistance. We're now in the beginning phase of the topic of support and resistance, and it's the #1 blower of accounts. It's the most taught, yet the most misunderstood topic in all of the Forex kingdom. So we're talking about support and resistance here. Lows and highs, we've interchanged their names. So when that trader is talking about I'm buying at support and selling at resistance, this is what they mean. But the mere element of support and resistance is not enough. Remember, these teams are named after animals. And so if they are named after animals, we have to go back to the lesson of Adam and the lesson of the engulfing candle yesterday and ask ourselves, why is it named that? Because anything that has a name should operate in the function of its name. Okay, so let's look at this example. And this horizontal line that I've drawn over here, let me draw one first. This is a horizontal line, okay? But for the purpose of this presentation, actually no, let me leave it for this. All right, so this is a horizontal line, and now it's just a line. So imagine a piece of rope or a string or a line in the road, okay? And you are going to say to a herd of bulls that when you get to this line, you cannot cross. Do you think, I'm asking the question, do you think that when the herd of bulls get to this line, because they see a line in the road or a piece of string, do you think that is enough force to be able to stop their movement? Yes or no? This line is representing a barrier, and you're saying that because I've drawn a line in the sand or held a string, is this enough force to be able to deter the herd of cattle? And the answer, of course, is no. And so you have to think of it like this. If the candle are named after animals and the animals are strong animals, bulls and bears, we need to think like and reason like those animals. What would cause a bull or a bear to realize that what is ahead of them is an obstacle? What do you think? If a piece of string is not going to work, what would be the thing that would deter them from going to the other side? If it can't be a string, if it can't be a line, what could you put there that would require them to put a lot more force to get to the other side? A log, we are getting warmer, but a log, electric fence, that is good. A wall, there we go. That's what I was looking at, because they can still break through logs. Electric fence is a bit, but yeah, God bless you for the answer. But a wall, you want to put something there, a concrete block, something there that would make them think that whatever that they're about to encounter, okay, it needs a lot more force to be able to break and get to the other side. So now you're thinking about price as a herd of animals. And the herd of animals' job is to be able to break to the other side and then continue their journey. So let's start this illustration all over again. The herd start from over here, and they want to get to this place as their destination, okay? So if the herd now have to encounter a wall, let's make it a bit big. Let's say this is the wall. Now this may look like a time or a space where the herd of cattle need to work together to break this wall. Now, if it runs to the wall and is unable to break that wall and it's running at full speed, what do you think will happen to that bull? Sorry. It's running at full speed and it hit the wall once. The wall did not break. What's going to happen to that bull or that bear? What do you think will happen? I know the illustration is a bit like elementary, but it would be weak. But what would happen? What would its reaction be? It would come back. It would bounce back exactly. So it's gone towards a wall and it was unable to break that wall. So it being unable to break that wall, it has been rejected from that wall and it's being pushed back. I hope everyone's able to understand. Their job and their mission is to get here. Now let's try again. The second time through, they're able to hit the wall and they realize the wall is now weakening because of the force they've been able to push against that wall. But it was not able to break that wall. What is going to happen to that bull? Very good. Retreat to get more momentum. All right, we have to think like animals in order to understand the animal function. So now the second time, it's been able to go back, and it might go back further because it wants to get more momentum to break. Now the wall is quite weak. But do you think the bull will have the same capacity or the same strength it did have the first time or the second time it had when it tried to break the wall? In other words, does it have the same strength as it did before when it was trying to break the wall? Yes or no? Very good. So it doesn't have the same strength, but it's used all its strength to make the wall weaker. So let's say, for example, it has been successfully able to break that wall. It went a little bit further back. It mustered all the strength and courage it had to be able to break the wall. What do you think it would do after it broke the wall with its last strength? What do you think? After getting to the other side, it has broken that wall, but now it has spent all its energy. So, what do you think the Bulls are going to do? It's going to take a rest. And it's most likely going to take a rest at the place where it broke because there's no other place for it to rest its head. So, the natural thing to do would be to look back and rest against the same place it broke for a bit of stability. It will rest, it will be able to gather strength, and then it will be able to continue its journey. I hope this illustration helps. But let's backtrack for a bit. In this rest phase, they call this rest phase a retest. It's a retest of the market. Okay? If you take away the E and the T, let me put this in a different bracket. What I've been able to do is help you spell out rest. In the retest, there is rest. So after giving all its strength to be able to break the wall that's been trying to break, after breaking and getting to the other side, it knows its destination is just ahead, but it wants to be at the full capacity to be able to get to the destination. So it's going to rest against the place it broke. That term, ladies and gentlemen, is called retest. And how I've been able to creatively break it down is show the R, the E, the S, and the T. The rest period is called the retest. After that retest, it will continue its journey towards that destination. Now, how do we put this in trading terms? We've broken this down as an animal. Now, what do we do as a trader? This point over here, when it's trying to break a place and it's being pushed back, in trading terms, it's called a rejection. Now it's easy to apply these terms to the illustration. So the bull was rejected by the wall not once, but twice. And then when it was able to get to the other side, we call this term a break of the wall. So that's where the price has now broken that particular area, and now it's able to rest against the place it broke, which is called the retest. And then after the resting period, it will then go towards its destination, and that destination to us is called the take profit. Now, in this retest, this is where you have what we call our entry. And we have a rule that is here, and it states that there should be no entry if there is no retest. Let me switch it around. And this is a rule that you will come by a lot in your trading journey, okay? No retest. I'm going to do this one. No entry. It means that if you don't see your animal of choice taking a break where it should be, you shouldn't enter into the market. Now, as a trader, what are you looking to do? Are you looking to buy or sell when you see something like this? When it's been able to break and get to the other side, remember, we're talking about bulls here, if it's able to break and get to the other side, when it comes back down to rest or retest, what are we looking to do as traders? We're looking to buy, okay? So that's where we're looking to go to. We have our take profit insight, and then we'll have our stop loss. And this is where stop losses are a bit tricky to teach, because we don't have fixed stop losses when it comes to our trade. We have a term called know your capital and know how much you're willing to risk. And we'll cover that in our trading journal section a bit later on. So when you have the mindset of an animal, doing this when it comes to Forex becomes a lot easier, okay? So now we need to be able to identify that we don't draw lines, we now build walls. And those walls are going to help us make an informed decision when it comes to our range trading. Drop a 111 if you think this is some good stuff. I was actually very surprised with the amount of text messages I got. And most of you know that I don't really reply to DMs much, but the overflooding of text messages I got, I couldn't help myself but open and read every single one. And people are saying that the insight this time round is just shocking to them. University students are now begging to come back to beginners level because they feel like they need to relearn these nuggets. And I've purposed to make this as detailed as possible. So this is how we want to be able to do it. How do we draw a wall then, if we've been able to only talk about a line? What constitutes this supposed wall? Let me draw this, and then we'll go back to our charts to break this down. So we have bullish candle, bullish candle, bullish candle. Let me draw another one. Bullish candle, bullish candle, bullish candle. Let me do another one. Okay, let me get the bears in. Sorry, just give me a second, guys. The drawing is the hardest part, but I hope this makes a lot of sense. Okay, so this is what I'm drawing so far. Let me add some wicks because we want to put everything into context, okay? Just bear with me. Notice how I don't really talk about candlestick patterns and candlestick formations and all that stuff. It's not really that important, really. I know other people would disagree. But there was something I covered in engulfing candles yesterday that allowed people to scratch their heads and they want to know more. And that was when we're looking at a bullish engulfing candle, what happens to the wicks at the bottom? We talked about the wicks at the top, but what about the ones at the bottom? We're going to cover that right now as we do this lesson. So the one who wanted revision on engulfings, we're doing that one right now. I have to just adjust this small. All right, so if we draw a line, oh, I haven't finished with this one, have I? A lot of times the market will trick you with long wicks that are taking place, okay, but they are probably touching a particular point. So when you are drawing these support and resistance areas, support and resistance is more the notion of you drawing lines. But when you're drawing walls, they are called zones. And these zones have different names. There's a support zone, there's a resistance zone. But let's get into this one and then we go up from there. So what you want to do is you are looking at the places where all price has an area in common. And then what you're doing is you're using the wicks that either are above or below that line to be able to create your wall. So looking at this one, let me point to this candle. What's this candle called? The candle I just highlighted, what is that candle called? It's an engulfing candle, right? That means that there's something that you need to be able to pay attention to. So the paying attention to is there's an interval that has been established at that point, all right? And that interval was established where the engulfing first started. So we have that interval that has taken place, and you're waiting for the interval to now come down. But I'm getting ahead of myself here, but do take note of this. So when you are drawing your engulfing, you already know that you're placing your line, okay, at the highest point of where the engulfed took place. And you're waiting for the market to come back to where it first started before it begins its true move, okay? And so what is this called? When the market now comes back to then perform its true move, it's gone up, it's set its parameter or its interval, it has now come back to where the engulfing candle first started. What is that term called? Who remembers? Who remembers? Reset, reset, very good, awesome. So you've seen that the reset has been performed, and this is the area now that has become a level of support. But wait a minute, how come there are candles at the bottom, but I've made my reference of support further up? Now we can introduce what the other wicks mean. So remember how I said that we're only looking at the wicks at the top of what is being engulfed, but we're looking at what the wicks at the bottom mean later on. So what we can now do is we go to the lowest point of that particular structure, and that can now be identified as that concrete wall that we are building for animals to now break. And so when it looks all pretty and you put it all together, this is how it looks. This is how you draw that wall. Let me put the opacity down. This is now the wall you are drawing. Okay, so what this means is that price would have to go all the way through with all its force and break to the other side and then rest after breaking. When you rest after breaking, what can you then do as a trader? Who can tell me? Man, the way I drew these candles are quite lit, eh? So who can tell me? After resting, what do we do? As a trader, after the rest, what do you do? It has broken the wall. It has come back to rest. Now you've seen the rest has been established. What do? You enter the trade. Very good. Excellent, 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 excellent. Well done. Awesome. So now looking at this, you can see that the parameter has been made. There's your interval, but you can see that there has been a wall that has been established. So now check this out. You will not draw your resistance area or that zone where the bodies are, okay? Because most people will draw them up here, okay? But if you draw them up here, you're now excluding the bodies that were formed below. If you draw them down here, you're now excluding the bodies that are above. So what do? We set it where the bodies are, one, where most of the bodies have it in common, and then we look for the highest point that has been established, and that's our wall, bang, and then you can shade it in to now distinguish where your wall is. So what this means is that price, the candles, would need to break above this, okay? And then it would have to rest back here, anywhere in here, before it continues its journey, okay? That is what I'm looking for with you and your trading when it comes to these zones. Now let's give these zones names because they do have names. Support and resistance has the connotation that there are lines being drawn at the low and high. Now when a support has turned into a zone, it has evolved into what they call a demand zone. Demand zone. So when you're talking about the bottom zone, it's called demand. And the top zone, which is the resistance zone, is called the supply zone. And now we get to know the rules of economics about the basic introduction of supply and demand. Okay, when there's too much supply and there's too much demand, there needs to be something that is demanded from the trader. Okay, so now let's go back. Let's delete these arrows. Okay, so now what we have here is we buy low and we sell high. And let's say the distance between these two, this point and this point, let's say it's about 200 pips. Which means that if you are a range trader, you are now deciding buying at the low point and taking your profit at 200 pips above, and then selling at the top point and then taking your profit 200 pips below. All right, are we together? So this has been made very, very simple for us. Okay, at a high point you sell, at a low point you buy. This is the basic entry into range trading, which is our topic for this evening. Okay, supply and demand is just support and resistance, it's just highs and lows. And remember, a range trading is between two distinctive points. What does this mean? It means that if price is able to break the supply zone, which is the new low, this is no longer a supply zone, or it's no longer a resistance. That resistance becomes a support. And every support demands a new resistance. Every new resistance demands a new support. Because remember, range trading is between two distinctive points. You cannot have one without the other. So now if it has broken and it has retested, it's now turned into a new, let me put this in, new, as Tony Chimel would say, new demand zone, or new level of support. When a resistance is broken, okay, that resistance is no longer a resistance. It has become a new level of support or a new demand zone. That means that there has to be somewhere above that becomes a new supply zone or a new level of resistance. Type in a Y or a yes if you're good with that. This is just on range trading. All right, so let's go back down. We have to now fix what we have drawn over here to now let it be within our rules of support and or resistance. So let's build on this so that we know exactly where we want to go. For the purpose of this example, I'll remove this one. Otherwise, the zone will be way too big. All right. So now let's keep what we've drawn already, but let's add on so you can see the differences between the two. I'm now going to move my line a bit down so that at least these levels and the bodies are now touching. I'm going to move this one a little bit up so that the bodies are touching. Can everyone see what I've done there? Slight differences, but they make all the difference in the world. And then what I'm now doing is I'm going towards the highest point that is above this line. Let me do some annotation. Look for the highest point above this line. And then below here, look for the lowest point beneath this line. That's going to help you determine how you draw your zones. Okay? So if you want help for the first time, what you can do is you can then get your horizontal line and then mark the highest point so you know where your wall is. get your horizontal line again and mark the lowest point, and that's where your wall is. So now this is much more concrete, no pun intended, than just having lines that are drawn. So if you want to see how this looks, get a new rectangle, and I'm marking my zone all the way across. So what we're saying now, that if we get a break of this concrete wall and then we get that rest after that break, you now have more confidence to be able to enter the trade. Now, what does stop loss have to do with this? Okay, because we want to be able to sell high and buy low, but we want to be able to have a protection that is made in case the trade goes against us. So what do we do here? Let's say, for example, let's see if we can find an engulfing candle somewhere in here, so it will help us with our submission for this presentation. All right, so for this example over here, we can see that there is an engulfing. Is this an engulfing here? Anyone want to say yes or no for me? Is this an engulfing? Drop a Y or a no. Okay, great. So now you have this engulfing that is over here. Let's pay attention to this particular area. Bang. Super simple, right? There's another one over here, but this one is a lot cleaner for interval sake. Now, what do we want to do here? As we're looking in, we're still in a 4-hour time frame. We want to be able to measure the interval. Okay, so it started from here, going all the way up. So now we have our intervals that will be set. What we can do is draw lines to mark every interval. So in case we look for a break, you now want to look for a rest. After the rest, you can continue your journey. That rest is what we call the retesting of the market. So let's do this going all the way up. And you've already marked where your supply area is. So you won't have a trade going against you for no reason. So we've been able to mark out intervals in case anything were to happen. And so at this point here, as a trader, where are you looking to enter? You're looking to enter where the reset has been performed. So let's mark this over here. Reset performed. And remember, when a reset has taken place, it means that the engulfing candle in question is no longer relevant as a reference. It means you need to look for another engulfing candle that has yet to perform a reset. So this reset has been performed, and now you're aiming for the first interval. Okay, now when we're looking at stop loss, generally what I would like to do is where the first engulfing candle took place, this one over here, what you can do is you can make a measurement of this engulfing candle over here and apply the same distance beneath. And that can be where your stop loss is. This is a new one, ladies and gentlemen. I have never taught this anywhere. So this is where the stop loss can be. So I'll mark it red, stop loss. Your entry is over here. I'll change it blue. So now, like I said, we're putting more meat to our trading personality as a range trader. So you found an engulfing candle, excellent. You've seen the interval, double excellent. It's come back down to perform a reset, more than excellent. And now you have a decision to make. You need to have an entry, and guess what? You need to have a stop loss. Like I said, I prefer you have an entry and a stop loss than an entry and a take profit, because you already know where you're going, because geometry is destination focused. So now that you have your risk, you can now look at your reward. And if it goes to the interval and it breaks the interval, what do you do? Give me the response I'm looking for. If it breaks that interval, what do you do? Go times 2. Excellent. So you're entering at this point where the reset takes place, and look at this. I'm not going to promote that we get sniper entries or perfect entries, but what I'm going to promote is that we get pips. So when you enter this reset, you might be in red, and we would have been in red for about 12 or so hours. Okay, doesn't matter, because then the market would have shot up. It was nowhere near your stop loss, so you're good. You can breathe a little bit. You can go about your day, but you have your risk that is set, and now you've been able to go up, and it's 200 and let's say 245 pips. Now, because you have that interval that is being set, you now can look for any other breaks and rests that take place. So look at this over here. When you see a break and a rest, even at these intervals, look at this, break, rest, you can then re-enter the market because it's now looking to go to another interval. So over here, we've easily now just banked how much? 490 pips or so. And look at your stop loss. Your risk was never even in the equation. Very good trade, and this is still in the confines of support and resistance, supply and demand. We're now making our journey from a low point to a high point. You've now gone between your destinations. You are now making moves in your journey. Break, retest, bang, gone towards the next interval. Guess what? It's done. Broken and retested that next interval, and now look and see what's happened. It has gone to the supply area. Look how close it got to the supply area. Anywhere in the supply area, that is where you want to take profit. Okay, this would have been well over 700 pips. Okay, and now what it's done is you're able to now distinguish whether you want to sell high or not. Now, what are some factors of wanting to sell high? I personally would want to wait for an engulfing candle and a reset before I would want to sell high. Why do I want to wait for an engulfing candle and a reset? Because then I will know where I'm going. I don't want to follow anyone that doesn't know where they're going in life. It's the blind leading the blind. So I would rather wait for an opportunity to pass me like this because there's no engulfing candle than to enter and not know where to take my profit. At least over here, we had a clean example of there was an engulfing candle, there was a reset performed, and then I can now make my stop loss known. I now know where I am going in the short term, in the medium term, and now in the long term, which is the supply area. This is how you want to identify as a range trader. And if this is the method of trading that is appealing to you, then my friend, my brother, and my sister, you are a range trader. Now, to add a bit more sauce to this meal, what I want to now suggest is that you want to look for resets that have happened on a Tuesday, because we've made a note that Tuesday going into Wednesday is where you're expecting reversals to take place in the market. If you remember our market cycle, you would have understood that Monday we don't do much. Tuesday, we're looking at what the market is doing as a formation day. So very well, what could be happening over here is a Tuesday push down going into an engulfing candle. Wednesday looking to reverse, push away from the engulfing candle, and it will make its way up. I don't want to make a guess, but let me see on my calendar if this is a Wednesday. It doesn't always happen, but it helps if it happens that way. So this was around the 17th or 18th of May. Oh no, sorry. Did I say May? 18th May. So what happened over here? 11th May was a Monday. Going into here. 11th, 15th. Oh, I'm in the wrong year. 2017. So I was looking at my 2020. I was confused. Hold on. This is 2017. Yes. Let me see what's happened. 11th May. Around there, 2017. I'm looking at my calendar. So over here, this candle that just dropped in, going into the 18th, 17th over here. Anyone else want to make a verification? 17th May. 17th May 2017. What day was that? It's a Wednesday. If anyone wants to verify, please Google it right now. So we had that Tuesday push up. Now Wednesday, you're making a decision. It doesn't mean that the market will take off straight away on a Wednesday, but at least you have another clue in the market as to what you're looking for on that Wednesday. On that Tuesday going into Wednesday, you're now wanting to look at engulfing candles looking to reset in the market, because at least it's a bit of assurance. Can anyone make a verification? I know Sophia wouldn't just protect me for no reason. I want 2 more people to confirm. 17th May 2017. What day was it? Everyone can agree. When 2 or 3 agree to one thing, then it stands. His presence is with us. So that is what happened. Now let's see what happened over here. 26th, 27th of July 2017. Let me go back into my calendar and see what happened there. So over here is when we had that push up, push up, push up, push up. It started around here, 24th, 25th. Let me go to my calendar. Let me see what happened here. 25th, bang. All right. So what happened over here, 25th? What day was it on the 25th? I've marked it for verification purposes. The 25th of July was what? It was, thank you, sir. I greet you special. The 25th of July was a Tuesday. Look what happened. It pushed up. And it pushed up into a supply area. Wednesday signifies a reversal of the market, but the reversal has to be in context to a particular structure that you are trading. And you see that the Wednesday reversal then took place. So paying attention to those Wednesday reversals will help. But breaking down this range trading will allow us to have a good feeling of the market. Okay, let's see if there are any other ones that took place in the supply or demand. Okay, so this one even fell lower and lower and lower and lower and lower. So we won't go back into that yet, but let's recap. If a support or if a support level has been broken, that means that the animal has crossed to the other side. What is that support now turned into? Who can tell me? Who can now tell me? Resistance. You guys are superb. It's like I didn't even teach today, right? Very, very good. So we've been able to cover in this lesson alone trading personality. And that is, if you are someone that doesn't want to hold for a long period of time, or someone wants to know, this is where I am, this is where I want to go, this is the range trading that you're looking for, okay? So let me delete all of this, even though the drawing is quite nice. And you can see that there are more engulfings that have taken place at the top that can justify the change in structure. But what have we covered today? We have covered trading personality. We've now introduced a good topic, and that is range trading, the consolidation of the market being between 2 distinctive areas. That was, what did we say? Low, then a high. We then gave definitions to say that if price is able to go to a low point or a high point 2 or more times, then that means it is a valid place where you draw your line. We then upgraded to say that these lines are known as support and resistance, and we had an issue with the lines because price was able to go above the line, price was able to go beneath the line. So we wanted to then convert those lines into walls or zones. We successfully did that by upgrading the support to a demand zone and the resistance to a supply zone. And now we've been able to uncover the other part of the engulfing candle to help us draw our zones. We then covered, again, the resets, and then we introduced retests, the rests in the market. We've gone through a lot in this session. So what I want everyone to do is I want them to go through their charts, 5 or 6 different charts, see if you can identify the support and resistance, and that is the line aspect. So first I want you to identify if you can find support and resistance. Doesn't matter if it goes a little bit above or a little bit beneath, identify support or resistance. And then with what you have identified, you then want to draw your zone so that you know exactly what to do. Final thing before I leave you, so that you can digest into range trading before we go into trend trading next week, is that if price looks like it's breaking, okay, or it has broken or has closed, it doesn't mean it's closed, because we have a zone now that we make reference to. But the term that they call for it going above a support and resistance line and coming back down, or vice versa, is called a fake out. And a lot of traders, especially new traders, get trapped by this all the time, because we were taught to draw by lines, and so we saw a candle go above our line and then we entered prematurely. That is why we don't rely on lines, but I'm getting you to draw them so you can see the evolution of the thought process between high and low, support and resistance, and then supply and demand. Now that we've been able to cover ranges, the next logical step after we cover trends is that we're going to go through the basic range trading strategy to be able to help you. Even though this is a strategy alone, you will now have to unlock ranges by learning a bit of the rectangle. And the rectangle has its own course, right? But I want to give you the prelude to the rectangle in the beginners, so that you know distinctively after I finish beginners bootcamp what is the next logical step. Because I don't want you to go through and get everything. If you say that range trading is for you, you only focus on the rectangle theory. You don't need to get the other course, okay? But if you're focusing on trends, then you're focusing on rhombus theory or rhombus mastery, which is now out, where it covers trends and trend reversals. So when we're talking about trading personality, we're saying that, are you a rhombus type of trader, which is a trend trader, or are you a rectangle trader? You need to understand that you should pick one journey. Every level of this academy, when we're doing teachings, we cover both range and trends. So don't feel like if you're trading range, you're not going to get the goodies that trends have. No, every level has something. Even when we go to Fibonacci in university, I do Fibonacci for ranges, I do Fibonacci for trends. So this is the next logical step after the beginners bootcamp. Which one are you? Now already, how many of you identify with range trading? Drop a 111. If you don't identify with range trading at all, then drop a 222. How many identify with range trading? You'll drop a 111. If it's not for you, then you're dropping a 222. Some people copy. Copy has been a convert. Sorry, of range and trend for the last year or so. So that's why he can't answer the question. It's okay to like both, right? I'm not saying that don't do both. What I am saying is that there is a journey you need to stick to. And when you're a disciplined trader, when you're disciplined in life, rewards come. Okay? So if you can already identify which one you're going to be, then it's going to be great. Okay? So that's that. So next lesson, we're going to be going into trends. There is a formula for trending markets. How do you identify them? How do you know when the trend is going to reverse? Okay, and then when we put all of those together, there will be a clearer picture on who will like range trading, who will like trend trading. Then after that, we're going to go into a bit of correlation. We're going to go into the distinctive introductions of each of these strategies: rectangle theory, rhombus theory, or mastery. We'll go into that, and then we'll wrap up with a trading journal. What do you need to do How do you document your trade so you can track how good you are doing? And how do you know how you are faring if you are profitable or not? So trading journals will be last, as well as the type of currency pairs you should stick to and you shouldn't stick to. All right. There are certain currencies, as a beginner, I'll tell you flat out, don't trade them. Disclaimer right now, as a beginner, stay away from exotic pairs like ZAR or MXN, okay? And stay away from Great British Pound as a beginner. All right, we'll go through why when we cover those topics. If you're a beginner, you want to stick to USD based pairs because they move much smoother and they're not susceptible to manipulation, even though it happens. But I will go through all of those things in the later chapters. But this one should be a good way to wrap up. I'm going to upload this as soon as possible, depending on how MTN does. It should be up by tonight or by tomorrow morning. Normally, when we do something today, God willing, the following morning it should be up, integrated into the website, because there's all this coding and stuff that needs to be done. But that should be it. Who enjoyed today? I hope you did, because I thought today was fire. I think this whole beginners bootcamp is fire. And some of you are looking at your wallet saying that how can this entire thing be just $40? What you need to do, anyway, let me wrap up the recording aspect. Bye. We'll see you in the next video.